Hey guys, welcome back. In today's video, we are talking about the huge AMC breakout, how the shorts will collapse, naked shorts being exposed again, and many more in this video. Now, when I talk about the huge AMC breakout, I'm not talking about the 6% move that we've had today, but instead what AMC is about to do. Firstly, you can see here, Taylor Swift, the official release party of a showgirl, comes to AMC theaters. AMC theater distribution also taking it to movie theaters in 100+ countries beginning Friday, October 3rd at 3 p.m. So this is what we are looking at. Once again, Taylor Swift is coming to AMC with releasing another film, and this time we are going to expect it to do extremely well, just like we saw it last time. But this also means multiple things. Firstly, what it means for AMC themselves, but also the AMC theater distribution. This is something that we haven't looked into for a while, but it's something we shouldn't forget because it's another revenue that we talked about with how AMC is expanding and growing, and this time obviously with another Taylor Swift film. And so this is something that I think that will, again, it won't be the last because we've seen it with Taylor Swift before in the past, we've seen it with others, and we'll continue to see it with even more in the future. And this is obviously a very, very good sign in terms of what AMC is about to do. I do believe that there will be more coming out for AMC. This is a win-win situation, no matter if it's for the box office and or it's for the distribution side. And so this is a very, very good thing. It obviously brings confidence, it attracts investors because it shows what AMC is about to do. And you can expect what Taylor Swift's about to release, especially with this, obviously to do very well like we saw last time. Another thing is on top of what we are looking at, so firstly bear in mind, we talked about the box office, we talked about the film distribution, the domestic box office is doing well as well, and this is what we are looking at. So on top of what is about to happen, the existing box office is already doing well. And now two things we have to really differentiate right now, which is the box office is already doing well, so we should be happy about that, we should understand and be confident about that. But not only that, we have to understand is that the distribution is different from the box office because that benefits AMC solely. The box office obviously benefits everyone that's in the industry, but AMC distribution, what they do only benefits AMC. And so this is why we've said with what we have going on, it's obviously very, very good. But on the other hand, if we take a look, so AMC is doing exceptionally well. They have the film distribution, they have new films coming out, not just with the Taylor Swift, of course, but with multiple others. So AMC is doing very, very well. But if we take a look at the shorts, I don't think people realize how close we are to the financial collapse from trying to save these hedge funds. When we take a look at the reverse repo, we're looking at $11 billion. So yesterday when we covered it, we were looking at 13, so a decrease of $2 billion. Again, the start of the week, we were looking at 17, and now it's gone to 11. So a difference of $6 billion gone within a week. And this will continue to go. This will continue to evaporate because these collaterals are being used to help save shorts in positions that they are just dumping money. And now we've talked about this. This is just the sign. This is the countdown of how shorts are going to run out of money. Now, multiple things will obviously come out with shorts running out of money. One thing that you guys will understand is that when shorts don't have money, they won't be able to create more synthetics of AMC. They won't be able to finance their existing short positions. So you will expect that as we see them face illiquidity problems, as we see them face with no more capital to use, we're going to be seeing them blowing up in certain positions. We're going to be seeing them in covering their risky positions, their short positions, and obviously in this case, AMC and GME. Now, what we will see to be the first sign of it is them obviously covering other positions that's not AMC and GME at the start, because they need to fill and dump that hole even more. But when they sell all of their positions, when they are running to their last option, that's when they cover AMC, that's when they cover GME, and it will be inevitable. And that's when we'll obviously see the squeeze. So you can expect to see how shorts will be panicking very, very soon. Another thing is, whilst we're looking at how short sellers are realizing that they won't be able to contain AMC anymore, they won't be able to suppress anymore, all these other institutions are trying to seize this opportunity. You can see Fintel June 30th, 2025, institutions own 195 million of 481 million AMC shares. Discovery Capital Management recently filed a 13G, buying 29.64 million shares. Institutional ownership now is up from 40.6% last quarter. So watch what they say, watch what they do, not what they say. And so multiple things that we have to look at here. First, we just talked about this. You need to realize that these institutions are buying into things that they think will obviously go up. And right now, as they see that some of their fellow institutions who won't have the money to short and suppress AMC anymore, they realize that the opportunity of a lifetime is about to happen for AMC. And that's why they're trying to buy as much AMC as possible, because they know that it will come to a point where the short sellers are unable to suppress AMC. And so the smart thing would be to accumulate as much as they can, as cheaply as they can, whilst the shorts are still able to suppress AMC, because eventually they won't be able to. That's why we're seeing institutions go up. And another thing is watch what they do, not what they say. And just like we talked about, you're seeing the increase in FUD. You're seeing the increase in news articles. These are something we've always covered about, certain news outlets releasing articles such as you should sell your AMC shares, such as AMC is going to go bankrupt, why you should stay away from AMC. There's a plethora of those articles that we've named in these videos. Yet, despite what that's saying, institutions are doing the complete opposite. They're saying sell your AMC shares. They're saying don't buy AMC shares, whilst they're doing the very opposite. They're not only not selling AMC shares, but they're accumulating even more. So this is what we talked about with how they realize that this is the opportunity of a lifetime and why they want to buy as much AMC as possible. And another sign of showing short weaknesses and why we are seeing the institutions seeing this as well is you can see, here's a hint, don't come on my feed and tell me AMC won't hit $3 again today, because what we are looking at right now is AMC did in fact close at $3.01. Bear in mind the max pain for this week was $3, and we are able to close above at $3.01. So this 0.1 is obviously very important because it shows the pivotalness of how institutions are losing to the retail. They obviously want to keep AMC below $3, but we also know that. And if we are seeing the volume kicking in, now I don't want to say that this volume alone is because of the Taylor Swift news. Whilst I do understand and do believe that what Taylor Swift's latest news with AMC, the latest collaboration with AMC, will of course do well, I do not believe that it has the ability to put AMC up 6% with a massive increase in the volume. What I do believe is how they're realizing that AMC is showing why it's extremely undervalued. And so on top of that topic, we have to understand is that this is why we are able to beat the max pain. We are able to beat these institutions by closing even just 1 cent above $3. Because that just shows that the shorts don't have the power to really dictate the price of AMC as much as they did before. Yes, they're still abusing dark pool. Yes, they're still able to rehypothecate because reverse repo hasn't fully run out. All these other forms of easy liquidity hasn't fully run out. But what we are seeing is how it's becoming ever so difficult for the shorts to do what they've done in the past, that they do it with ease. And now it's become a lot more complicated. And you can see AMC's stock volume today was 383% higher than the average daily volume, equals 41 million. Orders of 385,000 shares were being traded. I Smell Naked Shorts was trading, equals selling shares from the USA company to a sister company offshore. There's recessed the clock on FTD to keep the stock of retro threshold securities list. And so when you take a look at the time and sell the level 2 orders, you're seeing massive orders coming through. And now with this, we talked about it. Shorts are in constant need of resetting FTDs. They need to reset these swaps. The reason for this is because they don't have the ability to actually settle these shares. And so for them to not settle these shares, they're obviously trying to reset these shares. And now this goes on to what we talked about with the offshores. We talked about the European markets. We talked about the Asian markets. Once again, yesterday we've highlighted about how GME shares are forced to be liquidated in South Korea, and we know South Korea's stance on naked short selling, and so that already showed a lot about what we need to know. But on top of this, we can understand that this is what they're trying to do. This is what they're trying to prevent. And you can even see for where the sell volume come through, once again, off exchange volume at 61%, especially on the day where we're seeing large amounts of volume you can see 11.4 million volume was hidden in the off exchange. And so this is why we know that AMC would have gone a lot higher than 6% had it not been for the dark pool. And it's why we've talked about that this is not the breakout. The 6% move is just a very, very normal move. What's next is going to be the breakout. And then you can even see 519 million cat option errors on August 26. That's good for 51.9 billion shares. So once again, the cat system is exposing the naked shorts, is exposing these short sellers. We just talked about it. We see how they're trying to reset. Remember, one of the things that they can do with resetting is obviously with options. And now we're seeing the option errors coming close to 519 million. So you can really understand what is going on right now in the market, how these shorts are panicking, and why we are on the verge of beating them. Now, as always, this is the financial advice, so do take what I say, grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.